If we really look at Bitcoin on its own, it's done fantastic. And the problem is that a lot of people are just not exposed to Bitcoin. We have the children of the President of the United States having their own Bitcoin and crypto products. They only have 4 years to take advantage of that. So keep that in mind as well. We're going to get eased conditions. We can't also forget that just this week we had the president blatantly telling people to buy US stocks and essentially to put on risk in markets.
You better go out and buy stock now. Let me tell you, this country will be like a rocket ship that goes straight up. This is going to be numbers that nobody's ever seen before.
The last time the president came out and said buy stocks, what happened? Bitcoin is down below 90K. You've got all your favorite analysts calling the Bitcoin bull run over, and we never even really got an alt season. So the question here is, why is that the case while at the same exact time we've got institutions launching ETFs, telling clients to put Bitcoin in their portfolios, and laws being passed regulating the entire industry? On top of that, you have the Federal Reserve injecting liquidity into the banks at the highest rates that we've seen in the past 5 years, and getting ready to ease conditions after having been through a little bit of a tightening cycle since 2021. With all of that understood, with all of that in place, could the bull run really be over, or is everybody just freaking out? So let's talk a little bit about how markets move in the first place. Because as Warren Buffett famously has said, markets are designed to transfer wealth from the impatient to the patient. And he also said something around the idea that markets are a voting machine in the short term and then a weighing machine in the long term. The point being here is that everyone who is freaking out about what's happening in the markets right now, selling their positions as prices come down, are in a very vulnerable position at the very least. Because if we do get another push up in the markets, then they're going to be chasing the very high at the very end of the bull run when prices start to go back up again. To be clear, the time to sell is always when you have the major pushes to the upside in price. Okay, you want to sell when price is going up. And if you're in a bull market, then you want to be buying on the dips. Or if you really believe in this space for the long term, just dollar cost average the entire time. I think one of the biggest mistakes that people make is that they haven't decided whether or not they're going to be a trader or they're going to be an investor in the space, and not properly defining their actual timelines for how they want to be involved with all of this technology in this market. What happens is you think you're an investor, but when the price comes down 50 to 60%, you're uncomfortable and then you want to sell. And then once again, on the other way around, prices are going up and you think you're an investor, but really you'd rather be taking profits in those types of times. So if you haven't taken the time to define your actual time horizon and the stomach that you have, then please take the time to do that. Because what I see is older people who come into this space actually legitimately don't care about prices going down. Because why? Because they have assets outside of this space. But what happens for the young people is that you're coming into this game and you're seeing incredible gains, but you're not taking profit on them, when really you could be setting yourself up to have that nest egg now and then be able to take other risks in other areas of your life down the line. Now, this is just anecdotal stuff that I'm just trying to get off my chest now, just in case we do get another blow off top here and you have a chance to actually secure some profits and not have to look at this as just purely an investment, but also as an income generating opportunity for you as well. I think this is one of the biggest mistakes that I personally have made. Now, obviously, if you're doing well outside of this space, then just continue to accumulate is at least what I would be doing. So, another thing that I wanted to point out is this concept of max pain theory. So max pain theory is technically an options trading, and it suggests that the underlying stock's price tends to gravitate towards the strike price, where the most options will expire worthless. Basically, The idea here is that markets are going to move in a way that will create the most pain for the most people and take the most money from the most traders. And with that being said, we always want to keep in mind this concept as we're making decisions with where we think we're at in a market cycle. Where are the average people going to get hurt the most? Right? And I think personally, we'll talk a little bit more about that in just a second actually. Here's the truth about where we're at in the market right now for crypto. Bitcoin has had a monumental run. We haven't really acknowledged this, right? But let's put it on paper. Let's look at the math. Bitcoin was at $15,000 at the lows of 2022 and has gone up to $126,000 in September this year, which is over 700% gain. So the thing is that Bitcoin at $90,000, $89,000 right now doesn't feel euphoric for anyone though. It still feels really stressful and scary. And to be fair, right, altcoins have failed to keep up and have not presented these kinds of gains that we've seen in the past. So when you really look at the data, total 3, which is essentially altcoins excluding Ethereum, excluding Bitcoin, excluding Ethereum, and excluding stablecoins, has not even made an all-time high this market cycle. So that is something that is, right, unseen before. We keep on talking about, well, are we going to have a super cycle or are things different this time? And unfortunately, the data actually tells us that things are different this time around. Now, that's frustrating and it's tough. It makes it way harder to make decisions, but let's keep going through the realities of the market right now. Alt season seems to be nowhere in sight. The only pops that we've seen this year are from BNB and Zcash. Now, XRP also made an all-time high, right, over the pretty much last year around this time. But analysts have been calling for prices of around like $10 and more for XRP. So what is going on right now in the markets? Now, the truth is that Bitcoin has crossed below the 50-week moving average and has been holding below that, which is very, very, very scary for anyone who wants to see the price of Bitcoin continue. Because normally in a bull run, once you get Bitcoin crossing below the 50-week moving average and maintaining prices below that level, that usually means that things are done. Okay, so shout out to Jordan Cameron for sticking to that thesis and saying that he's out once we actually got that to occur in the market. Now, another thing that's been happening here behind the scenes is that we've had wallets, right, old school Bitcoin wallets that have been selling throughout this market cycle that have never sold before. Now, a part of the reason for that could be that they're just ready to sell. They don't want in anymore. They just want to take advantage of the fact that prices are higher and as high as maybe they think they could ever get. I don't think that's exactly what's going on, but the truth of the matter is that there's liquidity there now. You have institutions that are coming in and institutionally bidding up the prices of crypto and Bitcoin. And because of that, there's an opportunity for those whales who have just been sitting on crypto for decades to go ahead and actually let it go. Now, that is definitely adding to the selling pressure, right? You've got institutionals buying, but then you've got the bigger whales who are also selling at the same time. And I think that's a big part of why we keep on seeing Bitcoin go up and make a new high, but then immediately get sold back off. There's people who just want out of the game. So now what's actually different about this, we have to pay attention to also is like there is a narrative in the background as well. So we've got what's actually happening in the markets and then we've got the narrative of what's going on. The narrative is that this is the first institutional participation bull market. You've got the largest institutions in the world launching products that will allow pension funds and mainstream investors to get access to crypto. You have Bank of America officially coming out and recommending that clients put up to 4% of their portfolio in Bitcoin and crypto. Okay, so it's not even just Bitcoin only. You have Vanguard, one of the largest asset managers in the world, allowing clients to access crypto ETFs after swearing they would never do so. You have Larry Fink, the CEO of the largest asset manager in the world, screaming from the top of his lungs that everything is going to be tokenized.
As a huge believer of crypto and blockchain and tokenization, I want the SEC to rapidly approve the tokenization of bonds and stocks.
I think we spend so much time talking about AI. We're not spending enough time talking about how quickly we're going to tokenize every financial asset. And
what are some of the mega trends that are going to reshape investing, asset management as you look forward?
I mean, there's two, but they're all interconnected, and that's going to be AI and tokenization of financial assets.
After having launched a Bitcoin ETF, after having been a massive denier of the merit of Bitcoin for years in the past.
Called crypto an index for money laundering. BlackRock
and thieves.
and thieves.
Yes.
Money laundering and thieves.
Right.
You now have the biggest Bitcoin ETF. So what happened here?
I have very strong views, but that doesn't mean I'm not wrong. By having strong views, you have to test yourself and ask yourself. And, in my role, I see, thousands of clients a year. I have, governmental leaders, and we have these conversations, and my thought process always evolves. And this is a very glaring public example of a big shift, in my opinion.
We have the Genius Act and the Clarity Act right around the corner with full-on government support. You've got a strategic Bitcoin reserve coming into play. Now, you also have the Federal Reserve easing conditions due to the labor market not being so hot as we figured out throughout the year. We've gotten a little bit more data that tells us in retrospect, oh, by the way, we missed out on 1 million jobs that actually people, there's no jobs there. Then we had the government shutdown, which definitely threw a wrench in some of the data. We're still seeing, though, that the labor market is not doing that great. The question is, did we go through the worst of it, or is there more to come? So you've got a Fed that's ready to continue to drop interest rates. December 10th, we have the next meeting. There's an 89% chance that we're going to drop rates again by another 25 basis points. We have a new Fed member who was put in by the President of the United States and continuing to look to potentially also replace the Fed chairman in 2026. And we're going to get eased conditions. Now, we can't also forget that just this week we had the president blatantly telling people to buy U.S. stocks and essentially to put on risk in markets.
You better go out and buy stock now. Let me tell you, this country will be like a rocket ship that goes straight up. This is going to be numbers that nobody's ever seen before.
We have the children of the President of the United States having their own Bitcoin and crypto products. They only have 4 years to take advantage of that. So keep that in mind as well. This isn't, it's not something to me that's worth ignoring. I'm not gonna ignore the fact that the President of the United States has his own financial interest in seeing the crypto market perform well. Now, a lot of people are saying that all this institutional hype and all this noise is actually pitching to get all of these newbies into the game at the very top, and that they're basically using retail traders as exit liquidity. Now, a lot of us are also saying it doesn't really feel like retail ever showed up here. Like, where was retail? Never saw, grandma asking me about Bitcoin or things like that. We never saw the Coinbase app, obviously #1 in the crypto, in the app store, and everybody downloading it and all of that being the center of attention. So anecdotally, I don't feel like we've seen the cab driver and the barber talking about crypto and how it's going to change the world forever. But maybe I'm just out of the loop, and maybe this happened on TikTok in late 2024, and that was that retail kind of pop that you were going to see at all in this bull run. So could it also be that all of the people who are ever going to enter this market without being forced into it through institutional products, essentially, right, it just being in their pension fund, have all of those people outside of that category who would be forced to do it, have they already entered the market? Is there no more marginal retail buyer? Is another question. Another thing that people have been saying is that maybe all of the extra liquidity got sucked into the meme coins last year, and that meant that was where all of that money was going instead of it going into actual altcoins with real promise and utility. Here's what I'm doing about all this, because this is tricky. And I know we've even talked about, not relying on the fact that there could be a super cycle and things of that nature. The truth is I've done my part to sell some of my crypto on the way up, right? So I'm in a privileged position here to not have to be worried about it as much. So I'm preparing for a Max Payne scenario. where the people who are absolutely exhausted and want out sit on the sidelines while we have a generational run up in this market. I've never seen a bull market end when everyone is in agreement, shouting from the rooftops that it's already over. No pun intended. That's just not how things typically go. So like I said, I took some profits on the way up, okay, as one should, and I'm kind of staying put at the moment. And when I see incredible deals on projects that I know over the long run are gonna do me well for my long-term investment portfolio, guess what? I'm gonna add to my positions there. Now, none of this is financial advice. I'm not telling you what you should do, but I did want to provide some context on both sides of the argument here. Like, yes, the truth is, we've actually seen an incredible run for Bitcoin. If we really look at Bitcoin on its own, it's done fantastic. And the problem is that a lot of people are just not exposed to Bitcoin. We've had a lot of exposure to these altcoins, and therefore our portfolios haven't gone up the way that Bitcoin has. But that doesn't mean that the bull run has to continue on. On the other side of things, we have the actual narrative of all of these laws being passed that completely change the game. And you've got the macroeconomic backdrop that also tells a story of, well, we could be 6 months away from an absolute blow off top, not just for crypto, but for stocks as well. And last time the president, not his son, we don't listen to his son, but the last time the president came out and said buy stocks, what happened? That was the literal bottom of the market back earlier this year during the tariff tirades. So, I'm not telling anyone what to do, but I did tell you what I'm doing. And if you enjoyed this, be sure to like and subscribe. Trying out some new formats. I'm trying to figure out how to actually be helpful to everyone. And yeah, let me know what you thought of this in the comments down below. Also, check out Memes and Markets at the link in the description. We are talking about all of this stuff in a long form format, and it's a lot of fun. We go live every Tuesday and Thursday at 12 p.m. Eastern. So definitely don't miss that, and it's best to show up live because you also will get to ask our guests questions as they come in. But other than that, it's been Keith D, and I'll see you next time.